What are the trigger events that will cause the global economic collapse? That's the topic of today's video. I want to thank all of you for joining me. It's going to be an interesting one because it's something I've wanted to cover for quite some time. I've taken notes here on all the topics that I want to cover today, and so I'll get into it right away. Stay tuned for a very important episode. Now, I wanted to discuss this because we're always looking at the amount of debt that has been accumulated on a personal level, where you see people have their student loans at record highs, the amount of line of credits that they have, they're borrowing at rates they've never seen before, mortgages are at the highest level, second mortgages. We've seen people that have taken on every form of debt possible. Then you see the states and the cities, the pension funds, they're all in debt, they're all underfunded. You have seen the deficits rising like crazy. You've seen the national debt rising no matter where you look. And yet it doesn't collapse. So the average person will say, that's not a problem. We don't have a problem because look how much debt there is, and yet it hasn't failed. Well, that's what I'm going to talk about today. We need a trigger event to take place. Every crash seems to have a different trigger, so we can only estimate what that's going to be. But ultimately, at some point, there will be a trigger. It's not having too much debt that's a problem. But when that trigger finally gets flipped, then the debt starts to unravel. Remember, this system is literally born out of debt. That's how it works. So it starts to unravel. And that's not, basically it destabilizes the system. So let's get into the first one. Back in the financial crisis, we saw the Lehman Brothers, Bear Stearns failure. We saw Northern Rock around that time frame. A few years later, we saw the Euro debt crisis, the sovereign debt crisis, and what happened, everything after that, okay? So there can be bank failures that exist. There can be other corporations that fail, whether it's Fannie Mae, Freddie Mac. They have to become nationalized, they have to become bailed out, and so on. So we can have a major institution like that that actually fails. The question that remains is, what will be done about it? Okay, will they just let it fail and the assets will get picked up by different companies? Or will they do a bail-in scenario like it will happen with Cyprus? You saw that. Or it could be with any of the G20 nations today, because of course 2014 in Brisbane, they all gathered together. They decided that the bail-ins would be the way to go. It could be something to do with Italy that's becoming an issue more recently. They just recently bailed out the bank, but that's still a failing bank, Monte. And you could have some issues in Spain. There's a lot of turmoil there as well. It could be Greece again. It could be anywhere. But ultimately, a major institution could fail and it could start to, cascade. And that becomes a very big problem very, very fast. That's one thing. Interest rates. This is the one that I talk about all the time. You've heard me before. I'll just quickly mention it. The fact that interest rates are too high for them to be able to consume too much. If they get to about 3%. So if we're looking at about Fed funds rate around 3%, I think that would be a point at which it's unsustainable. Whether or not it's 3% or 4% or 2.5%, I don't know the exact percentage, but based on historical data, what I've seen is approximately 3% on the Fed funds rate. The LIBOR rate would have to come up a couple percentage points as well, which it would, and that's also going to be a contributing factor. LIBOR rates as well as Fed funds rate. Keep an eye on both of those. We're looking at derivatives. Now, derivatives are the elephant in the room. Everybody knows they're there. Those in the financial industry know they're there, but nobody wants to talk about it. That's what I think is kind of funny. But the derivatives we're looking at, based on any estimation, who knows, over-the-counter derivatives are in the hundreds of trillions of dollars. That's the lowest estimate I've seen. Hundreds of trillions of dollars globally. There's no possible way that they can ever bail it out. So what will they do? I have no idea. So I don't know how they're ever going to deal with something like this, but it is important to note that this could be a trigger event. If those start to unravel, we've got big issues. All right, speaking of issues, we got the trade issues. Now, these countries, whether it's China and the US, whether it's, any of these EU and the EUS and other places, it's going to be a big issue. So looking at trade, looking at who's doing what with who, all the tariffs that are being put on, sanctions and so on, this is going to become a problem. And I think that that could be a trigger event. If everything just stops, goes to a standstill, you could have I don't even want to say cascading, it would just drop off a cliff at that point. So that's something that it should be very concerning to all of us. We have oil. Oil's another big one, with something like the Strait of Hormuz becoming a very big problem at any given moment. We saw that points throughout history that could happen again. So we saw what will happen with that. We already know the history based on that. A lot of people will just say, hey, don't worry, the US can supply its own oil. Well, that's fine, but I guess that would mean that the US is all on its own, which of course it's not. There are trade partners, there are so many businesses that take place cross-border, and that needs to happen. Okay, you can't just shut off the taps and assume that everything's going to be okay. It doesn't work like that. Maybe over a period of time, 30 years or something, where they would have time to absorb a shock. Not overnight. Not overnight. I've heard that silly argument before. Then we have high frequency trading. Now this is important to know for those who don't know. I talked about it in my second book. High frequency trading is basically, imagine this. These companies are using the rich and powerful companies. They have connection speeds and computer programs so fast that they can see that you want to buy something. They can go ahead of you, buy it, and sell it to you at a more expensive price than what they got it for. So they can consistently be profiting off of those little tiny trades. So it's a monopoly and it's a scam. That's what they're doing to us. Okay, high frequency trading. But what happens with high frequency trading is that we have an issue where all computer algorithms all reacting to the same data, and it all happens in an instant. So you would have 1,000-point crash in literally an instant. There's no possible way that the market can handle this on the way down. We've only just seen, brief instances of this occurring where the market came down by 1,000 points, shot back up. We've seen brief moments of time where this has happened to other assets and so on, but ultimately it hasn't shown its true face yet, and I think that we will see a crash at some point. It's going to be devastating. They will have to shut down the markets, and then they can reopen at a later time frame after everything's been reassessed. So I think high frequency trading and computer algorithms are something that needs to be really brought to our attention, okay? And the black swan, the thing that nobody is expecting, that always seems to come around out of left field, and everyone's surprised, but it will occur. Now, the black swan event, who knows what it will be? I certainly don't know. Will it be one of these issues? Will it be others? It's generally something that nobody ever expects. No, nobody expects it, except for a handful of people, of course. But the general majority didn't expect it. So we'll keep our eyes out and see how it unfolds. Nobody knows until after it's already there. Two things that I want to point out that are not necessarily something that will happen overnight, but that are very important. And real estate is one of those. In a place like Canada and a place, different parts of Europe, where real estate makes up a large percentage of the economy, where the real estate is priced so high. Look at New Zealand, look at Australia. The prices are so high, and a lot of people are heavily in debt, so they have been really trying to protect themselves on this, and getting a little aggressive with anybody who would deem that it may in fact decline at some point in the future, which would be a very realistic assumption. But anyway, so we look at real estate as a big issue because there's a lot of money. I mean, we're talking trillions of dollars that's in this So it's not something to take lightly, as well as the fact that this is all collateralized. So they basically take all the mortgages, package them all together, and sell them off to investors. And as they start failing, these start to create a snowball effect. Okay, that's something else that needs to be thought about. And last but not least, the China slowdown issue. Many people don't want to believe that China will ever slow down, but hey, let's face the music. That's just the way it is. And the actual slowdown has been taking place over the years. We've seen that. It's quite worse than what we're being told. So the official GDP numbers are under 7%, but they've done private independent calculations of the GDP, and it's actually more like somewhere between 3 and 4% based on what I've seen. And that's something that, you know, if you start to admit 3 to 4%, suddenly it doesn't look so pretty, right? So China's another big one. What's happening with all the ghost cities? I hear they're filling up. Then the next day I hear they're not filling up. They're still there. There's many more ghost cities appearing, and maybe the other ones have been filling. I don't know. I really don't know. But ultimately, if you're willing to build ghost cities, how far are you willing to, you know, take this? This is the biggest public works projects in the history of the world, what China's doing right now. And it's going to be a mess. There's no way to put it. I mean, whether that will be a trigger, that I'm not sure about, but it is definitely worth mentioning because there's so much riding on China growing for eternity. If China starts to slow down, everything's going to be affected. They're the biggest consumer in the world of mostly everything. So it is very important, you know, whether you're looking at oil or different, you know, cell phones or computers and different things. They're buying everything. They're importing, and they're exporting as well. So let's keep our eyes on China as time goes on here. So where are we time-wise? This is definitely the big question that's on everybody's mind. How much time do I have? Well, I think that it's important to be prepared today. You need to be prepared today. You have to have all of your assets ready to go. You have to make your preparations. Now you might say, I don't have enough money, I don't have enough time, I don't have this or that. I understand. It's hard. It's hard to be prepared. It's hard to do all of these things when you have 1,000 other things that you have in your personal life that need to be addressed. You know, you work a day job, you have your family, you have so many things, obligations. But I think that it should be part of everyone's daily habits to do something in order to prepare, whether that is watching videos, reading, maybe you have a garden, you tend to your garden, maybe you do something, you help in your community gardens, you do something in order to make preparations. Just a small bit, even 15 minutes a day. If you're in transit, for example, every day to work, you could use that time to learn. So I think that it's not taken seriously enough. In terms of financially what you should do, I think everybody needs to make their own decisions. What I would like to do if I was somebody else, I could say this. If it was my opinion, I would be investing in all different types of real assets. If I'm going to invest in precious metals, I'm not going to go out there and buy maple leafs. I'm going to buy every different type of bullion, coin, junk silver, common coins. I'm going to buy literally every different type. Why? Because I don't know what's going to perform better than the other thing. You can do all sorts of calculations and ratios and everything. I don't believe any of that. It's good to know, sure. I think that the more diversified we are, the better. And I also like small denomination anythings, whatever that is. I actually like, for non-sophisticated people, if you're trying to tell your aunt, for example, oh, you should buy gold and silver. They may not see the value in gold and silver, but will they see the value in perhaps high carat jewelry? I'd rather that, in that situation, this proverbial aunt, to buy a little bit of high carat jewelry, keep it in a safe deposit box, keep it in your safe, bury it, whatever you got to do, keep that safe somehow, instead of buying, something silly. That's a better way to do it, better than buying a mutual fund, better than buying something that I think is going to be worthless one day. I'm not really a fan of paper assets at this time. I know a lot of people, they own their Amazon and Apple. That is fine. You may do well. What concerns me is that we won't know when to sell. The average person simply won't know when to sell. The biggest wealth managers don't tell their clients when they're going to sell, if they are going to sell. So the average person doesn't have that ability either, as far as I'm concerned, based on what I've seen historically. I've been researching this for a long time. So they hold on. They hold on for dear life, and they wait for the next time that stocks decide to rise up. That's fine if they want to do that. You should probably be investing, if you're putting into stocks, ones that give dividends, because at least you can get a little bit of income if they continue their dividend payouts. Remember that they don't always have to. They can stop them at any time. And I'll just, I'll leave it with that. Don't want to go on too long. Already way too long as it is. I'll leave you with that, and just wanted to say that it's late. That's all. Take care. I'll see you on the next video.